Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much. Welcome to the Kendall Report. Well, as we wind down the final week of May, it's really been a very lackluster month. Last month we closed at 41.81. We're trading right around 41.65 to 41.80. So we're just struggling to make any ground this month. But a lot of it has to do with all the uncertainty, which I'll discuss here in just a few minutes. As we look back on last week, the S&P closed up 0.4, up 10.6% on the year. NASDAQ up 0.3 for the week, and we're up 4.5 on the year. The Russell up 0.4 at 12.2% gain for the year. The whole month has just been a very choppy month, moving between growth and value back and forth, and there's no real direction. And I think a lot of this has to do with the uncertainty around all the infrastructure deal, and it's starting to look like this current administration is not going to be able to get very much done. It looked like everything was going to be easy for them, and here we are 5-6 months into the new administration, and they're really starting to struggle to move any initiatives forward, and I think that's going to continue to be the game. The other issue that's out there, in spite of the opening up of the economy, it doesn't look like a lot of folks are going back to work. Employment is starting to stall. There's some other elements in the economy that are also starting to look a little weaker than expected. We're seeing a number of economic metrics come in a little worse. This week we have GDP coming out. It's expected to show 6.4. This is the second revision of GDP, so it's really not material. I don't expect anything to come out of this. Looking back on last week, the big element to talk about, which was a no response actually, was the FOMC minutes. They reflected that there were several members that were talking about tapering the asset purchases. And you would have thought that would have freaked out the market. The 10-year would have started to go up. In fact, the opposite happened. The 10-year moved back to 1.63 and everything was very muted. There doesn't appear to be anything that's scaring the markets at the moment. They just don't have any direction. We went through this back in October and November of last year where there was a lot of struggle, had to do with the stimulus at the time. It's the concept of waiting for the government to do something. The markets are looking for some leadership, and they're not likely to get it from Washington, at least not at the moment. As we look at the economic reports that come out this week, on Tuesday, we've got housing price index coming out. That's expected to continue to surge. The shortage in housing happens on two levels. They shut down the lumber mills, and that caused the shortage of lumber, and now they can't seem to get ramped up fast enough to get the lumber out there, even though we saw lumber and copper and some of the commodities back up last week. This will continue to be a focus, but I think we're going to come up short on these housing numbers just due to inventory, because folks couldn't buy new houses, so they started buying existing homes, and there's just a shortage all around. How long that will last is hard to say, but it's continuing. We have to go all the way to Thursday to get to any significant reports this week. We have the initial claims expected 430,000. Continuing claims are a non-event. They came in at 3.75 million last week. I don't expect much movement in that number at all. Then we have GDP coming out as well, as I mentioned earlier, expected to show a 6.4 increase. The biggest thing to watch on the GDP report will be the deflator. It's expected to come in at 4.1%. If that comes in a little hotter than expected, maybe this inflation story will reemerge, but we'll see how that all plays out. Then we also have, at the end of the week, we have personal income expected to be down 17%, but personal spending is expected to be up 0.8%. So that's an interesting metric to look at there. Somehow people are getting less, but they're going to spend more. We'll see how that plays out. I'm not sure there's anything material there. I'll talk about that more as the week unfolds. But the PCE price index also comes out on Friday, and that's expected to show a 0.5 increase. Once again, this is that inflation narrative that continues to float in the background. So we'll see if that is able to play out anything at all from a market sentiment viewpoint. This week is really winding down the earnings. There's 245 earnings reports coming out. Wednesday, you got NVIDIA, Snowflake. On Thursday, you've got Salesforce and Costco. I'm really stretching here. Most of these reports are coming out are mid and small cap areas. There's not a lot of material reports coming out from the earnings standpoint. And then on our database, we continue to see some moderate traction on the short-term basis. On the intermediate, we did see a little bit of selling. We're still well above any of the support zones and the positive rotation. I'll go through all the details here in a few minutes. As we go through this week, I think we're going to see more of the same. We might be able to finally get some momentum, but we're going to have to see the S&P get over 4,200. There will have to be something come into the market that's going to stimulate the sentiment. Right now, it's just absolutely choppy sideways with a slight bias to the upside. Let's go ahead and take a look at the charts and see how they're set up for this week. As we review the WaveTech database, we'll start with the intermediate database. We did see it downtick just slightly, about 1% down to 69.62. There's 11,411 symbols long. So we look at some of the sectors here, see many of them are starting to get a little long in the tooth, and this is suggesting this intermediate database could see more of a rotation. As I go to the daily database, we're now at 54.63% bullish. We did see on the dailies 419 buys versus 279 sells, so there's a slight positive rotation that continues. The sectors are starting to come back in. We now have basic materials long for 5 days, but conglomerates have been long for a while, so we're looking still for some more rotation in the sectors. There was a new sector buy in consumer cyclical. We'll see if that gets much traction as we go through the next several weeks. But we do need to see more of these sectors come back on. The groups are at 37. All of these metrics need to improve as we go forward to keep the traction and pointing the markets to higher levels. As I review the S&P futures, we're up 9 handles overnight, 4160.75. We're starting to see a little bit of movement in PPM1 starting to uptick, but it's still flat. Everything's very sideways, as I mentioned in the opening comments. We just continue to be sideways in these moving average. The slow average is 4127. The highest average in the pattern is at 4160, which is the 21, so we continue to trade right there. Last trade is right at that 21 period moving average. I do expect to see it move above this, and we should see the PPM start to turn up, but we're going to need some closes at least above the R2 level, which is 4183. Ultimately, that will set up the test of the 4200 level and possibly set the tone for a retest of the all-time highs. As I look at the SPX, just looking at the market grid for today, expectations are for an S1, R2. I know that more than not, that tends to be the range when we have a slight bias to the upside, and it ends up to be on the downside. We'd have an R1, S2 as the typical ranges that they'll fall into. Sometimes we'll get a spike in volatility and we'll do an S2, R2. For the most part, we should see the S&P remain slightly positive as we come into the beginning of the week. So S1, R2, 4144, 4179. The PPMs have not are likely to turn up this week, and if we can get some momentum, as in the futures, we get above that 4179 level, we should start to set the tone to move back up toward the all-time high over the next 5 to 8 sessions. A quick look at the weekly SPX. The key level has been for a while now is the 10-period moving average. That was the key levels back in March. It continues to be a key level. The 10-period moving average is at 4114. It is rising at about 20 handles per week, so that'll be around 41.34. As we look at the market grid for this week, 41.23 is S1, R2 is 42.25, so we should start to see us move back up toward that range, and that will put us back toward the all-time highs. There doesn't seem to be a lot of downside, but the PPMs are all positive, 0.52, 0.55, and 0.53 on PPM 1, 2, and 3. I expect the S&P to stay in this upward trend, remaining above that 10-period moving average. As I review the NASDAQ, it is up very slightly overnight. It's flat over the last several sessions. The close has been very tight between the 10-day and 21 and 40-day moving averages. The low end is 13,288 and the upper end at 13,587. Look for the market grid for today. S1, 13,339. Overnight, 13,356. So we're almost down to an S1. R1, 13,470. So we're trading between S1, R1. Same as in the futures, looking for an S1, R2 on a daily basis. The positive thing to look at here is PPM1 is starting to get some acceleration to the upside, but we'll definitely need some follow through and a close above at least the R2 number to make any kind of momentum change in this market. Looking at the weekly NASDAQ, expectations here, 13,246 is S1, R2 13,741. Over the last couple of weeks, I've been expecting to see us move back above the 10-week moving average, 13,583. There's still a positive slope on the 10. PPM1 is at a plus 0.42, PPM2 at a 0.19, and PPM3 at a 0.37. So we have a nice upward slope. We should continue to climb along this line, and the 21-period moving average is going to be the dominant in this pattern at 13,344. The final market that I'll cover tonight is gold. I continue to expect to see gold stall at these levels and remain in a fairly tight range. I don't think we'll get above the 1900 level. The RXT today is 1905, and the low so far today has been 1882, so not quite to an S1. R1's 1885, so we've been above that, almost to an R2, 1892. I just expect to see this market stay in this sideways range for at least 2 to 3 more sessions. As we look at the weekly chart, this tells a much more positive story. I've been talking about this weekly pattern for the last couple months. I saw the bottom setting up. Now we're back above all of the averages, the 10, 21, and 40. PPM1 is at a plus 0.79, but there's still some issues with PPM 2 and 3, and also with the 21 and 40 week moving averages. We still have a slight downslope on the 40. It's at 1850. So my expectations for this week would be possibly an S1, potentially S2, which would be 1850, right to that 40 week moving average. And R1 is 1892. There's going to be a cap on this market right around 1900, could print up to R2 1906, but I do expect to see this market stay locked in this pattern. This will complete the video for tonight. Thank you so much for watching. We'll talk to you tomorrow night.